Hey Jack, it's Luis. I'm making this video for you to answer some questions for your clients and some of the traders that have been asking about the um, the distinction between when the black boxes or the algorithms trade and the institutions paper money. So I want to show you what I see with the order flow. I was trading for a while the S&P, so I know that the algorithms work when they have a big order to send in. Normally, they trade in children orders, meaning that they start shooting smaller orders of three, four. They just don't have an exact number. It's just a pattern of trades that they do to fill a big order. In the 10 years though, you can still see the block orders. So it's easier to distinguish in the 10 years as well as in the bonds when there's paper money coming in and when it's just an algorithm because of the volume. You can tell from the volume when it's just it goes down or it goes up at low volumes, you know that there's some algorithm trading. But when there's institutional money coming in, you can see the big blocks coming in and you can see the levels filling in and you can see the pressure, whether it's to the upside or to the downside. So I'm going to show you on this video what I see as far as the order flow and how you can tell that the market is going to go to the upside, break to the upside or break to the downside, which is what the order flow does in its core methodology. I have here the time and sales window and the order flow chart. I wanted to have the time and sales window just to show that this information here on the time and sales window is what it gets transferred. This is what the software does, is that allows all these orders that already happen to be transferred in here and to be able for us as traders to read them. I have right now this chart as a delta, meaning that, like for example, this 7,034 in red that you see here in this box, those are net sellers. So even from here, which was on the 12th at 16:59 p.m., all right, this is what they close at. A lot of sellers close here, and a lot of sellers here, 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 and here, and here. So those levels are 17 even, 18 even, 20, and 22. That's a lot of selling pressure coming in. So I'm assuming from looking at this order flow that when the market opens again, it's going to break down because there's a lot of selling that came in. This is not algorithmic trading right now. I'm going to show you what happens here. There's the market replay, and it's 8:13, 1 o'clock a.m. So it's starting to trade at 126.14, and as you can tell, it's below. Everything is below this 7,000. That's where the selling pressure came in. Now there's more selling pressure coming in here. This is only 7 a.m. I'm sorry, it's 3 a.m. right now. It's not even the market hours. And but I wanted to show what we can see with the order flow. Now let's go back here to this level now. See, the market didn't even go to that level when it started trading again. Okay, so it keeps coming down, and now there's more selling pressure at the 10 halves and 10 evens. So it should not trade now. It should not trade above this 15 even. It should keep coming down. So I'm gonna put this. Let's make it a little bigger, and I'm gonna move the chart up so we can see if it breaks. We can see it. So I'm gonna continue this. It's 4:22 a.m. on the 13th. Um, there are more selling coming in. You see how you can tell in the order flow that there's continued pressure from the sellers because they keep winning these levels. Here there's 5,000, 5,000, and if you see and look at the deltas below, this is the net of the column. So there's 29,000 sellers here, 7,000, and another 17,000 here. So they're coming in. They are definitely coming in, and they want to drive the market down. So let's see. it would be impossible to follow a time and sales window. That's why this every single transaction that you see occurring here, it's been transferred here, and that's the value of it. That's exactly what we do. So let's continue on and see how far the market breaks. It's already 5 o'clock in the morning. Market keeps breaking. Now here there is some interest at this level, at the 126.07. There is some buying interest. As you can see that there's 6,300 net buyers. So and it has switched to another column. So it may be that the selling may stop, but we still have to confirm that. So let's see, maybe some shorts taking profit. So no, it keeps breaking down. So right now it's a 755, 8. It just stopped for a minute because the market is opening, so should continue. Oh, there, 8:20. Now the market is open. It's 8:20 in the morning, and it keeps breaking here, and more selling pressure right there. 2,300, 3,700. It's not even trading up here. That now you have resistance up here. This is all the resistance you have because this is where the sellers are. And a lot of buying interest here at the 25.30 even level. Let's see if it holds. It should trade to it and hold. And if it breaks below that, then it's going to keep breaking. It's holding right there. Holding more buying interest here. So there's the pattern of the reversal, but then there's sellers. So not yet. No, more selling came in. Look how this changed. And the sellers came in net 10,000 sellers at the 30 halves. So and then it broke the market down. So that's it. That's basically what I can see with the order flow. This is the 10-year notes, and we can definitely tell the differences when the big money is coming in and when it's just algorithm trading. Okay, so hopefully this will answer any questions, and if you have any more questions, let me know, and I'll talk to you later.